Joining me now is Arbor Financial President Jeffrey Small. Jeffrey, I love that outlook if it is true. And so I want to ask you, I know that you think there's too much money that's sitting on the sidelines, that there isn't enough institutional investor money in some of these AI stocks. So when do you think that's going to change? When are we going to see this big influx? Is it going to be at a rate cut?
Well, I think we're seeing it right now. Since the Fed basically sees inflation as no longer a headwind, everybody seems to be jumping on the boat. And I think you have to put things in perspective, Kelly. The NASDAQ is down 2.5% the last 24 months. So we're really just trying to get back to break even again, even though a few of the Magnificent Seven have hit their all-time highs. I think it's important to note that there are a lot of these stocks that are tremendously under-owned by institutions right now, and that gives us an opportunity to get in before them as the little guys want to look for ways to increase their returns. But normally we have a 10% increase in markets and the S&P and the Dow as we march towards the very first rate cut, which we expect in March. It doesn't mean there won't be some choppy days in between, because as we know, markets don't form a straight line and go straight up.
Oh, yeah, fair point. And I like that you teased out that point, because we are looking at sort of 2 years of consolidating those gains. And traditionally, you do see that uptick after something like this happens, kind of a rebalancing. I'm curious to get your take, though, on the Magnificent Seven. They've had a huge run. I remember sitting in this very seat last year saying, oh, wow, Meta's down for the year. Amazon, oh, gosh, they all got hammered. Now we're seeing incredible performance. But some people are saying that they're overvalued now. You say differently. Why?
Well, I think, number one, the Magnificent Seven are magnificent because they bucked the fastest rate cycle increase in history. In a declining earnings environment, they outperformed. And we can expect that trend to continue as 2024 marches on. Their earnings will continue to go up. The ones that are all-time highs, NVIDIA, Apple and Google are at all-time highs. Meta and Amazon are about $25 below their all-time highs and are trading at a pretty decent multiple at 30 on Meta, 80 on Amazon. So as these companies focus on earnings, as interest rates decline, as the economy, inflation slows down more than the economy, we're going to see valuations go up. And of course, these are the things that you want to own because they're in demand. And not to mention that we're on the cusp of a secular revolution in computers with automated intelligence and automated learning. That is going to become part of everybody's life. And as the use cases go up and the applications go up, we're going to be sitting here in a year, Kelly, saying, okay, how are we going to use AI in our profession? How are we going to use it to organize our lives? And so these are going to be components that are going to change the way we look at technology. And the Magnificent Seven are on the cutting edge of all of those changes that are going to occur. And so it's not quite as big as the advent of the internet in the 90s, but it is revolutionary from the perspective that things are going to change. And that means these companies, Magnificent Seven mainly, are going to do very, very well the next few years as a result of AI.
Well, and so just to follow up there, because NVIDIA is kind of the big banner belle of the ball this year, if you will, especially with the focus on AI. But you have them as a hold rather than a buy. So what's your trepidation there? Why don't you think NVIDIA, amidst this AI revolution, should be where investors are putting their money right now?
Well, NVIDIA is going to have some competition next year from their AI chips. Intel and AMD are launching their own chips, have already launched their chips, and we'll see how much of a bite AMD and Intel can take into account in that block of business that NVIDIA seems to have the edge on. And so NVIDIA is not going to be the only player on the block. They're not going to have the franchise on AI chips. They are kind of priced to perfection, extremely overvalued from my perspective, too rich for my taste. But not only that, the street also thinks that because they're significantly under-owned institutionally. So the retail investor has beaten the institutions for those that have held NVIDIA. I would continue to hold NVIDIA. I would not look for a buy right now until we see a significant price drop of, let's say, in excess of 20–25%.
I know another one of yours is Amazon, and I've been looking at them. I've been really impressed what they've been doing with almost making themselves a platform. They're starting to introduce those courses that you can come and learn how to use AI. I think it's really smart. I'm very curious to see where that goes. Thank you so much for your insights today, Jeffrey Small. Happy New Year, and fingers crossed for a 10% increase next year. Thanks for your time.